The US stock market just did something that has only happened 4 times before in history, going back to 1990. We've just seen the small cap index of US stocks called the Russell 2000 go from underperforming the S&P 500 by 7% to outperforming the S&P 500 by 7% in just 5 weeks. Zooming out, we've only seen this happen in 1991, in 1998, in 2008, and in 2020. As I'm going to show you, this signal is incredibly important for financial markets and suggests that both financial markets and the US economy is at a major turning point today, just like it was in these instances. When this signal triggers, it means that investors have gone from absolutely hating small cap stocks, causing them to underperform the rest of the market significantly, to all of a sudden loving small cap stocks and causing them to outperform significantly. Just like many of the tools and signals that we use in our work, this signal represents a change in investor psychology. You see, small cap stocks are typically more sensitive to the economy. They're more volatile, they tend to have more debt and less cash reserves, which also makes them more prone to bankruptcy. So these are companies that can thrive when the economy is very strong, but investors tend to dump them when they believe the economic environment is less stable. So in theory, it means that investors went from very risk off and avoiding these riskier companies to very risk on and going all into small cap stocks because they're feeling more confident about the future economic outlook. And indeed, we see that 3 out of these 4 historical signals have been triggered right towards the end of economic recessions, or even in the case of the 2020 signal, it came right after the end of the recession. And so you can see in each of these cases, small cap went from being absolutely crushed during the recessions of 1990, 2008, and 2020 to all of a sudden outperforming as the US economy was coming out of the recession. And so in these instances, that signal was incredibly bullish for financial markets. And you can see when we add the S&P 500 on top, these signals correspond to very good buying opportunities for US stocks in general, because when the economy is coming out of a recession, that's typically a good moment to be owning stocks. Now, you're probably thinking there's a big difference with 2024 because we've seen the same signal, but the US economy is not coming out of any recession. In fact, we can easily make the argument that the US economy is much closer to the next recession than it is to the last. And so to us, it makes today's signal much more similar to the one that we got in May of 1999, which we can also argue from a business cycle standpoint, the economy was much closer to the next recession than it was to the last. And yet small cap stocks have been underperforming the rest of the market viciously throughout 1998 and 1999 in a similar fashion to what you would typically see during a recession, which is again precisely what we've seen throughout 2022 all the way till present day. In fact, when we look at the valuation difference between large and small cap stocks, small caps are about as cheap as they were back in 1999, right at the moment where we got that signal. So ultimately, the signal that we had in May of 1999 wasn't because of any big economic recovery. It was probably just because large cap stocks were much too expensive relative to small cap stocks. And the underperformance we saw in the late 1990s had just run its course, and small caps began to outperform heading into the 2001 recession and outperformed even more viciously following the end of the 2001 recession. So if today's signal is anything similar to May of 1999, it doesn't mean much from an economic standpoint other than the fact that perhaps the recession is a little bit farther down the road. But from a market signal perspective, May of 1999, following the signal, the S&P 500 did continue to move higher until around March of 2000. So all 4 of these historical signals did lead to a higher market in the months that followed. And in every single one of those cases, small caps outperformed the S&P 500 looking out multiple years. This is part of the reason why we've had a long trade on small caps on gameoftrades.net since April of 2024, because small cap stocks have become so unbelievably cheap relative to the rest of the market that the risk reward of this trade is very attractive to us. Our job at Game of Trades is to find as many investment opportunities with a great risk reward like this for our members. If you want to join our community, make sure to grab yourself a membership.